What is going on, my stock market bulls and bears? I'm your host, Terry, and welcome to the channel, baby. Buy the dip. That's right, guys. Hope you are ready for today's video, man. I got something really special. We got a brand new Spac that just been released today, what it's going to be, and I'm so excited that I went in and bought 100 shares of it. That's right. Ticker symbol is FRX, and this has huge potential. And I love where this place is going to be going and what they're going after. This adds a lot of diversity to my portfolio. Guys, like I said, first link down below, Webull. Use that link, deposit $100, get yourself some free stock, help your portfolio grow. Guys, I actually went in and bought the 100 shares on the Webull portfolio series, as you see right here. 100 shares of Forest Road acquisition. I bought at an average cost of $11.45. And it looks like the last price was $11.88. We are currently up over $42.50 on that investment right now. But I got a clip for today that we're going to go over the big news. And guys, hope you all are ready for today's video. If you are, hit that thumbs up and join the Thumbs Up Nation. I love and appreciate every single one of you guys. So let's get to the video, baby. Let's go. All right, guys, and before we get into the chart, I just want to show you here. Here was kind of the big spike today, as you can see. Boom, it shot up as people started finding out exactly what it was. There you can see where I bought in at right here. 100 shares at $11.45, and we are up here at $11.88 after hours, I think it said. So just wanted to get here and show you on the chart. Guys, a couple key things that I took from this interview. They have the CEO of Forest Road. I took these notes down, never going to watch that clip. Kevin Mayer, guys. He is the former CEO of TikTok. That's right. So you know when Trump put the ban on TikTok and they were forcing them to sell it, Kevin Mayer stepped down. He went into Forest Road acquisition, and he is looking to pick up this company that we're going to talk about. And he also, guys, is the same guy that created Disney Plus. If that doesn't get you excited, I don't know what will. Not only was this guy the CEO of TikTok, but he helped create Disney Plus. He's bringing his expertise into making this company pop, and that company is going to be Beachbody. So I'm super excited about it. Let's get in and watch that clip, guys.
Days into the pandemic, when gyms were ordered to shutter, and literally 3 days later, Carl Daikeler, co-founder and CEO of the decades-old on-demand fitness company Beachbody, joined us back on the Claim and Countdown. This afternoon, in the first sign, a private company that found huge adoption during the pandemic could be even bigger post-COVID. Beachbody is going public via the first high-profile entertainment SPAC or blank check acquisition. How high-profile? Let's bring in former TikTok CEO Kevin Mayer, the man also credited with creating Disney Plus streaming service. Also with us, Beachbody CEO Carl Daikeler. Welcome to you both. Carl loves that intro, Kevin, by the way. We're going to get to the structure of this deal with Carl in a moment. Exactly. But as advisor to the SPAC Forest Road Acquisition Corp, you could attach your name and expertise to just about anything. Why Beachbody?
Yep. Well, it's pretty simple. Beachbody is the Peloton for the masses. With the addition of this new bike through an acquisition of Mixed Fitness, they really added to their business model. And they've had 22 years. As you said, they've been around a long time. They've been very successful. They've grown to over $1 billion in revenue. And they have an incredible digital content play in terms of delivering fantastic fitness programs via direct-to-consumer to consumers who really value the programming. And they also have a nutritional business that's been going really well. And so you add the bike to that, it's a triumvirate, and it's a complete solution to the fitness space. And I really believe in it. And the team is awesome.
Kevin, you're the guy who built Disney Plus out of thin air, and it now has more than, 17 million subs. Beachbody is a well-established business with a competitive digital moat, but the encroaching attackers in the online fitness space are at the gates. Apple launched Apple Fitness. Obviously, Peloton has, 5,000 on-demand classes after just a few years. What can you pull, and what are you pulling from your Disney Plus experience to scale up Beachbody's 3 million subs?
Well, that's a great question. We are bringing in over $400 million of fresh capital, and I know how to deploy this capital to market the brands and to do performance marketing to get subscribers. And the other thing is, Beachbody has already proven over the last 5 years that they made a hard pivot from being an infomercial company to being a really cutting-edge direct-to-consumer company. They know how to do this performance marketing. They know how to get stuff. So we have a big war chest now to go after, enhance marketing, drive the subscriber base, and they have this great content, this real premium IP. It's the same type of thing that I had at Disney. We have a catalog of premium intellectual property that is highly valued, and P90X is a great example of that. That program is still incredibly popular today, and that was developed 15 years ago. So we have the IP, we have programs, we have marketing, and now we can drive subscribers.
Yeah, I know. This is no newbie on the street here. Carl, you're the guy. You're the guy who got cut from his high school basketball team on the first day. This has got to be amazing for you. You were already having a wild year. The merger is expected to add about $420 million cash to the balance sheet. Where will that cash go first?
Well, obviously, we're investing in a business model that's working, and that's what's so exciting about this. And obviously, to have a wingman like Kevin helping me execute on this business model is just a humbling experience. But we want to scale. We need to reach more people. We feel like we've got the business model that really works. And like Kevin said, there's a lot of demand for indoor cycling out there, but we've as a part of the Spac transaction, we're merging in with Mixed Fitness, which allows us to enter the world of indoor cycling with a very compelling price point, around $1,300. And then we bring in our flair, our ability to create great content. And we think that we can make indoor cycling, connected fitness, accessible to the masses. And that's really where we're going to step the pedal to the metal, if you will. I mean, we have 2.6 million paid subscribers right now. Last year, we streamed 180 million workouts, but that was 99% in North America. So this need is global, and these are the types of things that we're going to invest in with Kevin and the help of Tom Staggs and Kevin of FRX.
Yep, Tom Staggs, of course, former CFO of Disney. So everybody's making a big deal of that, Kevin. They're saying this is the first sort of entertainment, high-profile SPAC that will go public. Tell me how you see Beachbody as, well, do you see it as entertainment? I mean, I'd love to know sort of the thought process as you fielded ideas. And of course, it's trading right now on FRX. It is jumping as we speak by 6.8%. It will be under the ticker symbol BODY. But what was that thought as you look at how much bigger fitness could actually be when it comes to media?
Yeah, I mean, look, when we had a lot of inbound interest when we announced our SPAC, and over 50 companies that expressed interest to have us combine with them. But we looked at Beachbody, and they're benefiting from a lot of tailwinds. I mean, just the connected fitness tailwind that Peloton that led the way on. I mean, this is a very similar dynamic that we can take advantage of. The digital subscription, content subscription tailwind that I helped set up at Disney, that transformed the Walt Disney Company. That's just one of 3 tailwinds that Beachbody has. The other one being overall health and wellness, which is of course very important to everyone these days, more than ever. So we saw that they were benefiting from those tailwinds. We saw that it really is a content play, it's a direct-to-consumer play. It needs to be scaled internationally, as Carl just said. And there's M&A opportunities out there. It's a pretty fragmented space. You talked about competition. There are a lot of competitors out there, some of them very high quality, and I think that we have a platform to bring them in over time. So there'll be some M&A activity too. So, I did that M&A at Disney for years also. So I just think that it really matched well with the abilities that I bring and the team at FRX brings, and we love the company. It's really cool.
I don't know, Carl, you're really lucky here. I mean, he does check so many boxes here, but who checks the box that says we can take Mixed Fitness, MYX, which is, of course, part of this three-way merger, and they do fitness bikes. How do we take that and take on Peloton, which is the 800-pound gorilla here, Carl?
Well, it comes down to the experience that the person has on the screen. And this is what we've been doing for 20 years. We've created some of the most memorable brands in-home fitness ever. P90X, Insanity, 21 Day Fix, Lift 4. We've got over 86 brands on the Beachbody on-demand platform, and are constantly adding new content and live content on the OpenFit platform. And so honestly, this is our wheelhouse. Now what we get to do is, thankfully, Peloton, they've done a great job, very elegant, but we see opportunities for us to enhance that, to create a more engaging experience, perhaps a little bit less competitive, more accessible to people so they feel welcome. And ultimately, as they get results, which is what happens when people plug into the Beachbody ecosystem, they get results. And that's ultimately what creates a viral story. People see, somebody shows up at Thanksgiving, they lost 25 pounds, everybody in the room wants to know how they did it. And we expect that it's going to be with Beachbody, Open Fit, and a mixed bite.
Listen, I want to know how they
All
do
right,
it.
guys, there was a lot of great information in that interview, but I wanted you to watch it all because it sums up everything. You're hearing it directly from them. That way I can't say anything wrong. But a couple key notes that I did get from that whole interview that I really liked, not only is the man Kevin, the TikTok CEO, and he helped develop Disney Plus, which is truly amazing. Guys, they also are going to put $420 million on the balance sheet. And this company already has everything from the old stuff that they have as well, as you heard. The PF Fitness stuff. That was 15 years ago and they're still relevant to this day. I see this company as being a monster in the future, man. If they, this is going to give someone as Peloton competition. They're looking to come out with a cycle that's around $1,300 compared to Peloton could be $2,000 to $4,000. This is what I like to see, man. Competition in the market. And I'm super excited to have my 100 shares in there at a low starting price. And if it dips, I'll buy the dip. That's right. If this thing dips, I'm going to pick up more because as you saw in those three stocks they compared to, man, the fitness ones are no joke. Planet Fitness was like $70, almost $80. Peloton was over $100. So this is a really great opportunity to get in on, guys. This is one you don't think about. It's not EV. It's not clean energy. It is for your body. So, a lot of people are in touch with that one. So, guys, hope you all enjoyed today's video. If you did, hit that thumbs up and join the Thumbs Up Nation. I love and appreciate every single one of you. And I am sure this is going to be a moneymaker, man. I just have a feeling it's going to be a moneymaker. And we'll be bringing the Mad Dog out when this baby pops, and I can't wait. So, guys, I'll catch you in the next one. Remember to buy the dip, baby. Let's go.